Hello and welcome to the Accountant's Movie Review, where we sift through popular movies to find those accounting hidden gems within, which other reviews have almost certainly left you without. We will continue here with Ghostbusters. Ghostbusters being that movie based on the business of busting ghosts. Busting ghosts being short for the entrapment and storage of paranormal activity being ghosts. We will focus here on the most interesting part of the ghost busting business, the most interesting part of any business, the accounting. We just left off last time with the Slimer balance sheet. We had the cash on the books. We had the down payment on the building here. That gives us a total current assets. We had the auto down here, and that gives us our property, plant, and equipment for our total assets. We had the liability on the books that they took out, and we had the 2009 50 in partners equity at this time broken out in this way. We'll discuss how to do that later. And that gives us the assets equaling the liabilities and equity. That's where we're going to start off at this time. Next thing that they're going to need is the equipment, of course. So they had to buy this equipment, the major equipment being the proton packs, which apparently are unlicensed nuclear accelerators on their backs. So I'm going to assume that those are fairly expensive. I'm going to say that those are going to be $5,000 for the proton packs each one. They're going to get 4 of them. Now, note there's only 3 of them at this time, but I'm going to assume that they're going to get a spare because maybe they got like a deal on it. And in any case, they're going to get a new employee soon, and they're going to need the 4 at that time. So we're going to say that there's 20,000 for the proton packs at this time under the equipment. Then they have all this other stuff too. They got like this goggle things, and of course you got to have the walkie-talkies, and they have all this other type of equipment for their ghost busting business. And I'm assuming they may have taken some of that from their university, which they probably shouldn't have done, but they probably had to buy some of it too. So I'm going to say that the other equipment that they're purchasing, all this other stuff, is $11,215, and then we have this under the equipment. We also got to buy these entrapments. So this is where they entrap the ghost, these little entrapment devices. Now, it doesn't say that there's any nuclear whatever in here specifically, but it looks like it's the same type of thing. So I'm assuming those are going to cost a bit to entrap the ghosts. And so I'm going to say that those cost like $500 each. And I'm going to say they're going to need at least 3 of them. Now, note I know you're saying that obviously when they entrap the ghost and they put them in the storage unit and they can reuse the trap. But, you know, if they go on a job with like 3 ghosts on it, you would think they would need like at least 3 of the entrapment devices here. So I'm gonna say they need 3. So 1,500 on the equipment for the entrapment, and then they're gonna put it into their storage unit. This is in their building, and apparently this is a high voltage laser containment system, which sounds pretty sophisticated to us. And I think that's gonna be where they're gonna put most of their money. And of course, that's where they're gonna put the traps into this containment unit, and that's where the ghosts will be stored. So we're going to say that cost $20,000 on that, and I'm going to say that the total is $52,715 then for the equipment. Now at this point you might be asking that they've got unlicensed nuclear accelerators on their backs and they've got this high voltage laser containment unit. Have they talked about any licensing on that, or any kind of insurance possibly might be a good idea? And like many small businesses do oftentimes, it looks like they ran forward without taking some of those precautions going forward, and that could cause problems later on. So now we're going to put this equipment on the book, the $52,715. So if we put that on the books, we're going to have to pay cash for that. So we're going to say cash is going to go down by the $52,715 for the purchase of the equipment. We're going to put it all on at one time at this time. So cash is down to $60. And then we've got the equipment that's going to go on the books here. So equipment's going on the books for the $52,715 purchased for it. No effect on the income statement. If we take a look at our accounts now, we only have $60 cash. We've got the down payment. We've got the $52,715 equipment. We've got the auto. We've got the loan on the books still. No income yet. And we've got the auto expense, salaries, and the miscellaneous debits equal to credits. We have a loss at this time. Then they have their last business meal here. This represents the last of the petty cash. It's a very tense moment in the movie here. And I'm going to say it's going to be the last of all their cash, just to make it a little bit more suspenseful here. We're going to say the cash is going to be paid for this last meal here, the business meal, bringing cash down to 0. And we're going to put that into meals and entertainment. It is a business meal, we're going to say. And we're going to say that that's going to be $60. So what happens is they got no money now, and they have the $60 expense, and debits equal credits, and we have the loss of $3,010 at this time. At their lowest moment, Janine gets a call, and they have their first actual client, and she notifies the Ghostbusters, who then take a break from their last meal and go down the fire station Ghostbuster pole to get ready for the job. Peter here taking the last meal with him, just in case it is in fact his last meal. They then take off in the new car here that Ray has done an excellent job of remaking to the new job. Now they do actually catch the ghost, which was a Class 5 full roaming vapor as explained by Ray here, and happens to be Slimer, the most famous ghost that we have. And we can see that Peter here is writing up the bill or the invoice, and we can see that he is helped by Egon. They're going to charge $4,000 for the actual entrapment, and then of course they have to charge for the proton charging and storage of the ghost, and that's going to be another $1,000. So they're going to charge $5,000. They expect to be paid on site, so the check is written at that point in time, and they get their first $5,000. Very exciting moment in the movie. They're going to get cash is going to go up by that $5,000, and we're going to have the other side of that being income going up in the credit direction for that $5,000. So here's what we have at this point. Let's break this out into the financial statements and see where they are at in terms of financial statements at this time. If we take a look at their Slimer balance sheet, we now have the cash on the books at the $5,000. We've got the down payment on the buildings, and that gives us our total current assets. We've got the property, plant, and equipment, $52,715. We've got the auto on the books, $4,008. That gives us our total property, plant, and equipment. Total current assets plus the property, plant, and equipment gives us our total assets, $70,515. We've got the loan on the books still. We've got the breakout of the equity. And the total here of the equity, we'll talk about how it's broken out next time in a second. And that gives us the 1990, which basically is our net income at this time. We can see that the assets equal liabilities plus equity. If we take a look at the income statement on this side, which basically breaks out this number at this time, we have the Slimer income statement. We've got income, $5,000. First time we've seen that. That's great. We've got the auto expense for the parts for the repairs that Ray did on that. We've got the advertising, we've got the meals and entertainment, we've got the miscellaneous for the sign, giving us total expenses of $3,010. And then we have income minus expenses, giving us the net income of $1,990. That, of course, being the part of our balance sheet at this time in the partners equity section. Now let's talk about how we broke it out into this way, because we have three partners. How do we break out that income between the three partners? So we remember here that Ray put in more money. Well, he didn't put in more money. He put on collateral on the loan. So because of that, we're going to say that, Ray, we're going to give you more of an allocation of the income. So if it was a full year that had passed and we had income of $1,990, we're going to allocate to Ray 10% of the loan because he put collateral down on it. And that would be $6,853. You might be saying, well, how can we allocate Ray $6,853 when we only had income of $1,990? And we could say, okay, we allocate Ray $6,853. What would we have to allocate to the rest of the partners in order to come out to the net income of $1,990? We're going to say 6,853 minus 1,990 means we got to allocate 4,863 to the rest. Three partners divided by 3. And so we're going to allocate 1,621 out. So Egon's going to be allocated basically a loss. He owes the company 1,621 even though the company made income because of this agreement we're assuming to have made for Ray to get a bigger chunk of the allocation. Then of course Ray's going to be allocated that loss of 1,621, but he already had the income, therefore the company owes Ray 5,232. And then of course Peter's also going to be allocated the loss of 1,621. He owes the company 1,621. This is the allocation breaking out the income of 1,990, assuming that was where they were at the end of the year. And that's how this breakout is happening in the equity section to come up with this number on the balance sheet. Going forward, they are going to do very well going forward because the business starts to boom for some reason or another. And then they do have a problem with the Environmental Protection Agency comes down and they have an issue with this. And this is Walter Peck. And this actor plays basically the best bureaucratic role I've ever seen.